Hyundai Motor India Limited.
India's largest IPO, Hyundai Motor India, made a muted debut on the stock market on 22nd of October. Now in this video, we'll compare Hyundai Motor India stock with auto giants Tata Motors, Maruti Suzuki and Mahindra to help you decide which stock is best for long-term investment.
So between the four, I feel the right way to look at it is Hyundai being an MNC automaker and challenger brand in the mass segment. For anyone seeking such a theory or such a thesis, Hyundai Motors is a very good bet. For those seeking market leadership and retaining market share as a story, Maruti Suzuki remains a very ideal bet. Its strategy of not jumping headfirst into the electric vehicle strategy was frowned upon by many, but seems to be holding it in good stead. The hybrid strategy seems to be finally picking some very good pace and working in its favor. At the same time, if of course, the story with Mahindra and Mahindra has been that of a turnaround. It's right from the change in design language to its a point of service and point of sales expansion. It has been a turnaround story over the last 8 to 12 quarters. Right, so M&M remains a turnaround story with the trajectory now plateauing slowly as we move ahead. Something very similar has happened with Tata Motors, where it really turned around in its design language and its offering and its electric vehicle stack. But with the demand uptake for autos slowing down and electric vehicles slowing down even further, it may be slightly tricky for Tata Motors to continue the trajectory that it enjoyed over the last couple of quarters. Right, so these are very distinct bottom-up plays on the auto segment.
Now, if you're looking to invest in the auto industry, here is what the sector-wise outlook looks like.
The industry is clearly in a slump with interest rates being at all-time highs, financing being a challenge, and the rural demand not really coming in as much as expected initially at the start of the year. There were certain headwinds that emanated from weather-related uncertainties, and which had a massive overhang on the consumption demand for passenger vehicles very specifically. Right, so we are left in a in a logjam sort of a situation where inventory is not moving at the pace which was initially planned out. But this is across the board. This is a sectoral headwind, a sectoral challenge rather. Right. So we believe that this challenge will persist for far longer than it's not going to be very seasonal or very transitory.
So which auto stock should you buy for long-term investment? The Hyundai Motor India IPO, valued at 27,870.16 crore rupees, is India's largest public offering. It debuted on 22nd of October, receiving 2.37 times bids over 3 days of bidding. The retail and non-institutional investor segments were not fully subscribed. The IPO was entirely an offer for sale of 14.22 crore shares with no fresh issue component. While Hyundai Motor India brings fresh potential after its IPO, Tata Motors leads in EV innovation. Maruti Suzuki dominates in passenger vehicles, and M&M has a strong foothold in SUVs and agriculture. The right choice depends on your investment strategy, whether you're seeking growth in the EV market or established players with a diverse portfolio. If you found this comparison helpful, make sure to like this video, subscribe to Business Standard, and hit the bell icon for more insights on the stock market and investment opportunities.